Hello and welcome to this closing bell edition on Moneycontrol. I'm Yatin Mota, and with me, as always, we have the one and only
Santosh Nair.
Santo. Santo, a yo-yo ride for the markets. We opened slightly weak. Intraday in the first half, we saw some volatility. But I think ahead of the expiry, the markets managed to close near that 21,500 mark, an important zone. And most importantly, for the bank Nifty, it took support at the 200-day moving average and managed to close 100 points higher at 45,080 odd levels. The mid-cap index, strongly outperformed the benchmark indices, ending higher by nearly 2%. And the advance decline ratio today was almost 4:1. So 4 stocks advancing for 1 declining. In terms of sectors, we had all of the sectors trading in the green, but the top momentum came in the media sector with Z leading the gains. Yesterday, we know that the stock fell 30%, but today the stock managed to bounce back 6-7%. Metal stocks moved higher on the Chinese rate cuts, which happened. Reserve ratios were cut by nearly half a basis point. That index was up 3%. PSU banks also rallied a lot, 2% higher for that index. Santo, a good day for trade after 2-3 days of disappointing momentum, especially in the mid caps. So today we were regaining in terms of the momentum, especially in the PSU stocks.
Yes, true, Yatin, but to be on the slightly cautious side, I would say that this was almost the third time that we have seen a more than 1% intraday cut fall in a single session. So this clearly indicates that there is fatigue setting in at higher levels. And interesting thing about yesterday's fall was that the market went below the level it had touched on December 20th. So that's also a sign of weakness according to technical analysts. So there is some bit of caution, and the fact that people have been able to make good profits over the last 5 to 6 months, that is prompting many to book profits at these levels. But at the same time, there does not seem to be any compelling reason at this point in time to sell aggressively. So which is why you're not seeing the market come off very sharply. Whenever it does come off sharply, the bounce back seems to be very quick. Main reason for that is also that there is still a lot of money waiting on the sidelines, and we're actually been seeing that every time the market has fallen. Yatin.
Absolutely, and very stock specific action, especially in the result season. We had a lot of momentum, boys. Motilal Oswal gained 12% after earnings. Tanla moving up 7%. Tata Elxsi down 5%. So yes, a lot of mixed reactions, Santo, and one of the stocks is still on your radar when it comes to earnings.
Well, Tata Elxsi is the stock. The stock was under pressure today, among the prominent losers. Now, on the whole, the earnings season saw the IT services sector getting back in favor with the market. We had some pretty decent numbers from Infosys, Wipro, TCS, but however, Tata Elxsi's third quarter numbers, that's fallen short of market estimates. The company reported a quarterly top line of 904 crore rupees and bottom line 914 crore rupees, I beg your pardon, and a bottom line of 208 crore rupees, but not good enough to impress analysts who were expecting much more. You have Morgan Stanley rating the stock as an underweight, and it has cut the price target to 7,500. Now, according to Morgan Stanley, the quality of growth could have been much better had its embedded product design division, the growth in that particular division, been much stronger. And clearly there are, according to Morgan Stanley, there seems to be challenges in the media and as well as parts of the transportation business. So that casts a question mark over the demand outlook. This seem to be problems seem to be very specific to Tata Elxsi. But lastly, the most important thing is that Tata Elxsi has always enjoyed premium valuation. So that becomes the issue. So when a stock enjoys very high valuations and the growth numbers don't match up, then there is bound to be disappointment. More so because there is a lot of volatility in the market at this point in time. Valuations have become expensive. So wherever there are disappointments, the market seems to be very quick to punish the stock, and that's where probably Tata Elxsi has suffered today.
Clearly, and that stock, moving down by nearly 5% in trade after the back of weak numbers. And as Santosh was mentioning, Morgan Stanley has also cut the target price. Moving on from technology to FMCG, and it has been a disappointing quarter so far for consumption, be it HUL or be it the quarterly updates. They have been disappointing. But probably brokerages now believe that a few pockets are showing strength. Pidilite is one stock wherein JP Morgan is bullish. They have upgraded the stock to overweight and raised the target price to 2,900. Now, Pidilite, the quarterly numbers, before that, JP Morgan believes that from here on there could be some significant amount of re-rating in multiples, which is the valuations, and from here on they are expecting the downgrade cycle to end and a profit CAGR of 16%. So the key trigger for JP Morgan is that Pidilite should start showing strong double-digit profit growth. In fact, they have also raised the EPS estimates for FY25 and FY26 by 3%. And from here on, they expect the earnings momentum to continue on the back of revenue growth. Now, we have seen Pidilite doing quite well with respect to the waterproofing solutions, with respect to, their pasting solutions, which includes brands like, Fevicol. They also recently acquired Araldite, which they are trying to consolidate and expand the portfolio. Brokerage is now sounding slightly bullish on this consumption name, especially given the fact that now the core FMCG names have been witnessing some lagging growth. Probably with the construction sector picking up, real estate picking up, companies like Asian Paints and Pidilite should be able to benefit in the near to medium term.
So stock has been pretty range bound, Yatin.
Yes.
For quite some time you're seeing it move in the band between 2,300 to 2,600 rupees. At the higher end, clearly there seems to be a lot of resistance setting in, and I think that is where probably the company needs to show that it can really grow its earnings. So the market not convinced. So and also the fact that a lot of people who had bought into the stock during the upswing of 2022, probably there's some technical factors also at play. So you're seeing resistance around those levels. Well, and with that, the last stock on my watch list this afternoon is Havells India. Havells, again, third quarter number falling short of market expectations. The top line grew by just about 7% year on year for the quarter ended December, and the net profit was just about slightly higher. The stock ended slightly lower in an otherwise buoyant market today. Now UBS has retained its buy rating on the stock with a price target of 1,800 rupees, but it's also flagged plenty of negatives. So the key one is that the company's business to consumer, which is the consumer electric sales, that continues to be weak, and that is affecting overall margins. And also the losses because of the acquisition of Lloyd's electric business, the run rate of losses that clearly has the losses had been slowing down at a fast rate, but now there also seems to be some bit of a lag effect coming there, which according to UBS is a bit of a concern. And the fact that the company's quarterly growth, annual growth of top line growth of 7% for the quarter and about 7.6% for the 9-month ended December, they are below historical averages. So clearly these are some of the concerns that UBS has raised about the company, and it remains to be seen whether the numbers will improve in the coming months. Clearly the update, the outlook, business outlook from the management as far as the business to consumer is concerned, that has also been quite subdued.
Actually, there have been converging trends in the entire business, Santo. Havells Polycab did not have great results in terms of the FMEG, which is the fast moving electrical goods segment. The wire business also is kind of slowing, but there is a hope that with real estate sales moving up so sharply, the branded products like the ones in the portfolio of Havells Polycab should do well. It's to be seen whether or not it picks up in the next 3-4 quarters, because usually with a 1.5 year lag, I think all of these companies should benefit, given the fact that the real estate projects have just commenced. So there is a 2-year kind of cycle which could probably help these companies down the line. So it remains to be seen how the performance happens, but tomorrow is the FNO expiry day. Stay tuned to Moneycontrol, because we'll get you all the action in the future in an option space, and also our market expert will probably handhold you in these volatile times and where to invest and where to really put in your money when it comes to the mutual fund business. Stay tuned to Moneycontrol. We'll be shortly back. Be back with the coverage of Tech Mahindra's quarterly earnings. So be with us, and the Tech Mahindra's quarterly results should be out anytime, with the coverage beginning only on Moneycontrol.